Morning, guys. How we doing? Morning. Morning, last common broski. Hope you're doing well, mate. Snow day. Oh, mate. Telling me about it. Are you based in the UK? You based in the UK? Nice. Whereabouts in Manchester? North near Bury. Nice. Yeah, I got a friend there. Why is it temporary? You go to you get a flight ticket to Portugal or something. You getting out of it. Moving abroad. Just came back from Portugal. Sheesh. Yeah, I think I remember speaking to you about it actually. Bro, going from Portugal to Bury. Yeah, exactly. Living the dream. You'll get back there, broski. You'll get back there. But yeah, the snow's been wild, right? The snow has been wild today in the UK. Morning, Marius. Sorry, broski, I didn't see your message. I'm streaming between YouTube and Discord, so I'm dipping between the two. But yeah, yeah, awful. So I had to. I'm on slightly later today because I had to drive my missus to work because she literally will not drive in the snow. Like, she's that. She gets that scared in the snow. She will not drive in it. So. Yeah, exactly that. Common. Exactly that, broski. I do have. As you know, I do in Plymouth. Good stuff, man. Yeah, as you know, I do real estate, right? So I have some stuff dotted around that been involved in. So I know Manchester. I know Manchester really, really well. Oh, amazing city. I actually went to uni in Manchester, so I know Manchester incredibly well. It's changed a lot recently, right? It has, mate. It's like it is a mini London now. Like, it's crazy. Like I remember the days. I remember the days when the Beetham Tower. I remember the days when the Beetham Tower was the biggest building. Well, I guess it still is, but there's so many around it now. It's kind of dwarfed. You know what I mean? Mate? So yeah, that sound always scares me, right? That sound always scares me. When people sub on YouTube, scares the living crap out of me. Yeah, definitely noticed that you can tell more people live in the city. Yeah, man. Like I swear, like and by the way, I'm looking for 77 on NQ. So I'm looking for 77. Looking to get up towards mitigation of this range here. It's like what was it, like 80,000 new homes in Manchester in like the last 3 years or something. Absolutely wild. Yeah. My missus's brother is like a manager of cranes. You know, on building sites, he's like the site foreman. And it's been like his busiest period in God knows how long. In years. But he's getting paid an enormous rate. He's on like 400 quid a day or something. Because they're so in demand. So like, if you want a job in the UK at the moment, Become a site foreman in cranes. It's good money, and it's easy. He does nothing. He sits around, drinks tea all day, and just tells people, yeah, make sure you wear your high vis. Make sure you wear your, make sure you put your hard cap on. Make sure you got your steel boots on. That's literally all he does all day. Gets paid $400 a day for it. I'm like, Jesus Christ. Some traders want that. So I'm looking for price to go up to 77. That's currently what I'm looking at the moment. So we've had quite a big sell-off overnight. Quite a big sell-off. Asia highs are still intact, as we know, and then we've obviously got this divergence with ES, which didn't get tagged yesterday. So things to be mindful of going into today. Obviously come back down into a discount of the hourly dealing range, right? So at no point has this low been taken out. At no point has that high been taken out. So this is still our dealing range. So we've just been working inside of a premium. Track retail in long, running back down to a discount. Now looking for them to induce retail and believing the market's going to move short, only to then pull it back up. So currently at the moment, we're just looking for 77. We're currently at 56. Marius in Plymouth. Very nice. I've never been to Plymouth, broski. I've never ever been. So what's my thoughts on CFDs versus futures? I mean, they're both tradable, bro. Do you know what I mean? They're like the only thing you got to wrap your head around is lots versus individual contracts. I mean, that's the only thing you got to get your head around. But apart from that, I mean, it's relatively straightforward. If you want the equivalent to one mini, I guess sizing is the only thing. Last comment on Ceci. So I mean, if you've got like a tiny account, CFDs can be quite useful because you can go down to like 0.01 of a lot size, which is like minuscule. So that's the advantages of CFDs. But if you want an equivalent of like a mini, you want to go for about 3 lots. So depending if you're trading NDX or whatever, NDX 100, SPX 500. So either one of those, that's the equivalent of ES and NQ. So I don't really have anything bad to say about them, bro. And I do trade them. Like I've got an account with Funded Next, as you know. I'm affiliated with them, so I have accounts with them as well. And I trade. They only do CFDs. They don't do futures. So I do trade CFDs. Yeah, they're obviously not exactly the same, right? They're obviously not exactly the same, so if you're trying to chart on NQ to trade NDX, for example, you're going to get, there'll be slippage because it's not exactly the same, right? So if you're going to be trading CFDs, you want to be mindful of where NQ is, of course, but you've got to be charting on the CFD chart, right? So whether that's NDX, whether that's SPX. Why? If you opened up a brokerage with a CFD broker. If you're on YouTube, guys, feel free to, if you got any questions, feel free to reach out, guys. I'm inside Discord at the moment as well, so I can read your messages if you want to write something on YouTube. But yeah, I mean, geez Louise, is it cold today. I need to get going with the live account, and lot sizes etc. seem a bit less straightforward than just picking a percent risk. You can do, I can't remember who's got one. I think you might want to reach out to Little BB. I swear, I think Little BB's got a, I don't know whether it's a separate bit of software or whether it's built into his brokerage. But basically, he's got a calculator for lot sizes for CFDs based on risk, based on percent risk. I think it's Little BB. If you want to reach out to him. Alternatively, like if you want to do what I do. So I just basically use three full lots, right? And that's the equivalent of one mini. So if I want to do 2 minis equivalent, I'll just do six lots, right? Or 9 lots or 12 lots, depending on how many equivalent minis I want to take, right? So that's how I trade CFDs. It's not exactly the same, but it's as close as you're going to get. Make sense? But just try it out, bro. Like, if are you doing it with a live account or a brokerage? Live account, as in live funds, as in live money, or a live prop. Gonna go live funds. What brokerage are you looking at for that? So currently just looking for 77 on NQ, just looking to get up to mitigate this range on the low. Come back down to a discount on the hourly dealing range. Just flip this dealing range, right? So we've just come from a premium back down to a discount, anticipating a pullback, just to mitigate this range on the high. So I'm currently looking for this 1 minute SIBI at the moment. So 77 is my current target. I could be convinced otherwise. It depends what your personal circumstances are, bro. Depends what your personal circumstances are. Like, have you traded a prop before? So what have you been trading up until now? Okay. What brokerage are you using to do that? So, yeah, obviously I don't want to go into personal questions when we're broadcasting live. But if you go, I don't know what your personal fund size is. Like, have you got a large pot of cash to play with, or small? Yeah, fair enough. So I'd say anything under 5k is small. What's up, everyone on YouTube? Good morning, good morning, good morning. Hope you're all doing well. Are you consistently profitable? Because I know you've spent time in paper, right? So are you super consistent now? Is that what's making you want to switch live or what? Because obviously going with a live account, you got to be pretty damn confident in your ability, right? By the way, I mean, if your account size is about that size, what you're talking about, then what, I mean, that's incredible, bro. 6% a month for 6 months is incredible. And like that, saying that's not major is insane, bro. 6 months, 6% a month is insane. Like, it's phenomenal. It's amazing. Is that since you joined Red Pill, by the way? Is that since you joined Red Pill? I'm pretty sure you've been with us about 6 months. Yeah. If your account size is that size, you may even want to consider trading the micros versus the minis, right? And just do just trade micros versus CFDs. Oh, you're doing Forex. Jesus Christ, broski, you're going full. Yeah, that's a big old pivot, isn't it? I mean, I guess the reason why I like futures so much over Forex, sorry, is like it's 1 for 1. So if you're buying a contract and you're selling a contract, there's a market match, right? It's always 1 for 1. Whereas with Forex, it's not, right? It's the level is set by your broker, and that broker varies depending on which broker you're using, right? This is stuff you're probably well aware of, but because of that, you often get slippage on Forex. And obviously my style of trading is hyper precision, right? So I go for primary entries, right? I'm not a secondary entry trader, and because of that, I have to be super precise on my entry. So I don't like Forex for the sake of that slippage on a primary entry. That's just my preference. So that's the reason why I don't trade Forex. That's why I'm a futures trader. And also I don't like having to track correlated pairs and that sort of stuff. It just seems like an additional layer of faff that is just unnecessary. I mean, yes, we have correlations that we look at in the futures market, NQYM, ES, you've got ZB1, the 10-year bonds, Dixie, you got SPX, SPY, ES. You got your divergences to look at, trading the futures market, but they're confined to that. It's just my preference. So yeah, I mean, this benefits the trading futures for sure. But if I were you, broski, like, I'd definitely dip your toe in the prop world just to get a feel for futures if you've been trading Forex for that long. you know, if you wait for, you know, even if you join, you know, join Funded Next, you can use my code that's on my YouTube stream at the moment, and you get a discount. Or whether you just want to go and use Apex when they have a 90% sale, I don't particularly care which brokerage you use, but you know, you can get a brokerage for pretty much dirt cheap and just trade a prop firm account until you're consistent with that, and then utilize that to pull out funds to then fund your personal account. So that's basically how I do it, right? So I have my own personal account, and I primarily look to trade that, and I have a personal account with Ninja Trader, and then I have my prop accounts tied to Ninja Trader as well. So then I have a copy trader if I want to, where I can just link them, right? So I can link my personal with my prop, or my prop with my personal, that sort of stuff, if I wish to, right? So that's how I do it. But for me, like, just in terms of user experience, the best ones for me are my Funded Next, or it's not, they dropped my, so it's just Funded Next now, which is the one who I'm affiliated with. So Funded Next up here, and Apex Trader. Those two are the best for futures. Albeit Funded Next doesn't do futures, they do CFDs, right? So if you want to trade CFDs, go to Funded Next. If you want to trade futures, go to Apex. Don't get, like, if you want my advice, I wouldn't get involved with any of that TraderVate linking to TradingView stuff. It's it's full of pitfalls. Like, the software isn't very great. You can't do OCO, you can't do one cancels the other. So, just my 2 cents, broski. No problem. But if you want to trade like a super small account, because what you want to look at is your how much overnight margin you're allowed to keep. Like those sorts of things are big with which broker you choose, and your broker margins and your broker commissions, right? So Ninja Trader have really good fees. I think I have a PDF of it somewhere. Let me try and dig it out. Pretty sure I do. Where would I have put that? Where would I have put that in here? I have so many folders. Let me see if I can. Let's have a look. Where's the micro? Where's the micro? Where's the micro? Because that's what you'd want to be trading. Yeah, so if you go onto Ninja Trader, like you can see all their pricing here, right? and like the margins that you need to have in your account in order to trade them. So, you know, if you want to trade E-mini, you need to have almost 13k in your account just to trade one. If you go down to the micro, where's the micro? There you go, the micro, just short of 2k. So yeah, these guys are my favorite, and also their platforms is great, right? They got a great platform. So for me, for any size account really, whether it's small or large, I would suggest Ninja Trader if you want to trade your sort of futures market. I can't stand trading through TradingView. I absolutely hate it. I'll never ever do it. I did it once and just absolutely, it just didn't suit my style of trading. The reason being is you can't do OCO, right? So my style of trading is based on OCO. I scale out of positions. So I don't know how anyone trades on TradingView without it either being fake, or they're not using OCO, or they're just opening themselves up for massive amounts of risk. So because if a contract pulls back on them, it's just going to flip their position. So what I mean by OCO is, for example, if I went long here and say I took 4 contracts and I had a partial to take off, one here, and I had a terminus up here. So I had 3 contracts at purchase, right? Right, and OCO is if I take one off here, right, this will reduce to 2. Right, that's how OCO works, right? And if I took another one off, this would drop to 1. With TradingView, you can't do that. So if you take one off here, this stays at 3. Right? So if you take another one off, this stays at 3. And it's only when it gets up here and your final position closes, does it close the trade? Does it collapse it? So that's just not my style of trading. Like I want to be getting out, and and then holding a runner, right? A lamb to slaughter. That's my style of trading. So I very rarely move my stop, and if I do, I only move on breaker structure, all that sort of stuff that you guys are fully aware of, right? So what I don't want to do is it take one off there, and then comes back, runs on my position, and now I've gone net short, right? When this is triggered, I'll be net short. I don't want to do that, right? I just want one contract left. I just want to cancel my position, right? So that's why I don't like TradingView, for the inability to do OCO. And also it has loads of glitches with its connection to Tradeovate. So if you're going to trade futures, you'd want to be with Tradeovate if you wanted to trade on TradingView, because they have an integration. But it's just plagued with glitches. That sort of, whatever that connection is, however it's done, right? So I just avoid it. It's just something I don't get involved with. I just stick to Ninja Trader. Right, so this is what Ninja Trader looks like. This is how it. So basically, this is like my trading screen, right? So I have multiple charts up, obviously. So I have other charts and I have other screens, right? And you can link these. But essentially, I just switch the account, right? So whatever PA account that I'm trading. So PA is a live account, so it's a live funded account, right? I just trade off here, but I personally trade off the DOM. All right, so I'm not going to do it because obviously it's a live account. But if I was to enter here, then I set my ATM strategy, right, to whatever ATM strategy that I want to use, right? So if I want to use, say, NQ. And you can set your ATM strat. So stop loss at 13 ticks, TP1 at 36, stop 2 at 13, and then TP at 64, right? So that's my NQ2 con. So if I'm trading NQ, then I'd use this. And if I was to click on this side, so if I wanted to put in a buy limit order, so for example, if I was analyzing price now and say I wanted to go off this little rejection block on the 1 minute at 80, I'm on ES right now, one sec, let me switch this. Let me go on to NQ. All right, so say I wanted to go off 32, which is mitigation of this little range here, right? This fractal. So I could come down here and I could go with my ATM strat in place. I could just click on 32, 32.25, whatever, and this is going to set a buy limit order, and it will show up on this chart here, right? So when price comes down and triggers that buy, my stop and TP are automatically put in place, right? So that TP will be shown on the DOM. It'll also be shown on your chart. And then what you can do is you can just move, you can move your TP and stop loss. You can move your TP and stop loss on the chart trader, right? So if you have chart trader up, you can just move your stop and TP. And for me, it's like the most proficient way of trading futures, like this setup. Like enter your buys and limits on the DOM and then manage them on your chart trader. So that's basically how I do it, using NinjaTrader. And I do this for both a live personal account and I also do it for a prop firm account. Right, but that's with Apex. The alternative is obviously to do it with TradeRate with Funded Next. And Funded Next have their own inbuilt MT5 software. So you just basically trade off their web platform. Make sense? What a banging little entry that was, right? Talking to you, I'm talking through my analysis live. So I'm basically looking for price to get up to 77. Let's have a look at ES. So ES is turtle suit, that low. This low here. Bom dia, Sergio. Bom dia. Morning, anyone who's on the old YouTubeage. We're currently inside this little inverted fair value gap on the 1 minute. Back down inside of a discount on the H1 dealing range, right? Currently looking for 77. So apparently it's going to get to -3 today, where we are. -3. Basically, anything below 0 in the UK and the whole world, just the whole country just falls apart. Basically, the country can't operate below 0. Everything just doesn't function. So as anticipated, it's mitigate this little fractal on the low. So I want to see that low hold. So currently looking for 77. I don't know how many more times I need to say that. Yeah. So let's have a look at the news today. See what we've got coming out. We've got Empire State Manufacturing at 8:30, and then we've got the Bank of England speaking at 10. And we've also got Goldman Sachs and Morgan Stanley dropping their earnings reports pre-market open. So just be mindful of that. So let's see where you go over gap down from. So classic trigger on the high this morning. So flat top on ES. NQ doing the turtle suiting, which is what you want to see if you're looking for lower prices. So currently we've got a divergence on the high and low. So what's keeping me out of taking a long at this point in time is how NQ's not taking this low. Both back down in an hourly discount. Off to 77 we go. Off to 77 we go. Tripped yesterday on my ankle. So just keeping an eye on this little inverted fair value gap on the 1 minute. You can see how the higher time frame, the 5 minutes, respecting it. 1 minute doing the damage, 5 minute telling the story. So I'm currently looking for 77 on NQ, which is just to get into mitigation of this range. A couple of ticks below it, basically. Sim. Andy, what's your current streak on Wordle, bro? If you've only taken me, I'll be fuming. Pardon me. Give us 77 NQ. Let's get. Let's get. It's not had a single pullback. It's just gone straight up from that little low of the inverted fair value gap. Yeah, 9's good, bro. Mine's 11. So yeah, that is good. You're not far off. You're not overtaking me though. So currently at the whole site number at the moment, 16,850. Currently looking for 77. Is it your daughter though? Is it your daughter who's got 9? Let's be honest. So you've now got a break of 1 minute structure, right? So this is what you can do, right? So going to protected highs, protected lows, okay? So as always, I start on the lower time frame, and I'm sub 1 minute, okay? So I'm always looking at the 15-second chart. So you're looking at protected highs, protected lows. Where's the high which put in the low? Here's the high, right? The high which put in the low. On the 15-second, there was a break before this, right? So the 15-second leads to the 1 minute. So once you've got a 1 minute break in market structure, you should be going up a time frame, right? To look at where's the protected high on the 5 minute or 15. Okay. So the 5 minute protected high is this high, right? That high which put in the low. Okay, so low hanging fruit objectives would be to take positions off inside of a premium of the 5 minute dealing range, right? If you got in down at the low off the discount of the 15, which I'll get to in a second. So a 15 minute dealing range is this high which put in this low, and prices just chopping between a premium and a discount, right? So I'm looking inside of the discount to take it back up into a premium of this 15. So what I do is, if I'm anticipating this to be the low, which I am because we're inside of a higher time frame dealing range discount, I'm looking for price to pull back up into this 15 minute premium after breaking structure on the lower time frame. But where I don't want to be trading or entering trades is at fair value. Right, that's not where I want to be entering. I want to be entering inside of a discount. Okay, so you're back up inside fair value of the 15-minute dealing range. So if you want to be trading, you want to be getting in at the extremities, right? You want to be getting in at the low or the high of the dealing range. It also happens to coincide with being a whole site number of 16,815. Your 12-year-old helped you occasionally. Occasionally in brackets. So for those of you who are on YouTube and just new to my channel, I'm not a super trading every single fluctuation trader. If you want to do that, I'm probably not your guy, right? I'm looking to capture larger ranges. So I trade maybe between 3 and 6 times a day, right? It's how I trade. So if you're looking for continuous trading, that is just not, it's just not my style. I certainly will not be entering around equilibrium of a high time frame dealing range. So what you have here is inside of this discount range of this 15-minute dealing range though, which you've now flipped over, right? This is a 1-minute inverted fair value gap, right? And you can see how price is respecting the quad levels of this inverted fair value gap. On this low here, this is a wick on the higher time frame, right? So you always want to be mindful of what the higher time frame is doing. Okay, so I often do this. If price is sloppy, and today's sloppy, right? Sloppy price action. You'll obviously get you often get prices moving through levels which you'd normally see anticipated to be respected, right? So what I'll often do is, if I'm looking for this inverted fair value gap to be respected inside a discount of this 15-minute dealing range, is I'll then go up to the higher time frame to see how the 5-minute is respecting, right? And you can see how the 5-minute is respecting the lower quad of that 1-minute inverted fair value gap, right? Inside of a discount of the 15-minute dealing range. Okay, so this is all market structure, right? Protected highs, protected lows, subordinate and parent price swings. So all of this is just engineering liquidity. For a run on it. 2 seconds, guys. Just nip to the toilet. Morning, guys. Morning, Yaz. How did you get on? Have you left work now? Then have you left work? Have you quit yet? Last day was last week, wasn't it? Morning, Iron Man. How you doing, bro? How you been? Yaz, can you hear me? Just wondering if you finally left your job now. I know you handed in your notice, but has that time come? Has that day finally arrived? Sure, John. No problemo. So let's be very matter of fact about it. Let's go over here. Let's go over here. Let's go over here, guys. So we want, as we know, there's swings, right? So for argument's sake, let's call this a high time frame swing, a 5-minute swing, right? So this is a low, a high, a low, a high, a low, a high, right? This is a 5-minute range. But inside this 5-minute range, you are going to have subordinate 1-minute ranges, right? Right? That would be a very simplistic way of looking at 1 minute and a 5-minute. Okay, so you have subordinate and parent. Okay, and then above the 5-minute, you'll have a parent to the 5, right? So protected highs and protected lows are dealing ranges on said time frame and combining that with parent and subordinate price swings. So what is a protected high and protected low? Well, on the 1 minute, let's just extend this out quickly. Say price had come down from here, right? When this low closes above this old high, and for me it has to close above, right? So when this low closes above this high, this becomes your protected low. So if you're a OT trader, which I'm not by the way, but if you were, this is where you could look for your return to Jesus. Did I draw that exactly to 62%? God, you think I've been staring at charts for a while, huh? So that's how you'd be utilizing that to get in, right? But when this low closes above this high, right? Because this then becomes the new high, right? When this low closes above this high, this becomes the protected low, right? And the same premise. This is your new 1 minute dealing range. So when this low takes out this high here, when that gets taken out, this becomes your protected low, right? As you move higher. Now what can happen is this on the 5 minute is you want to be wary of what the 5 minute's doing, right? Because what can happen is then you're now getting extended on the 1 minute. And say for example, this low, and this is where understanding premium discount becomes key. Say this becomes your 1 minute dealing range, right? So this is now your protected low, this low which put in this high. So if you run your fib across it, you can see that this low at no point got back down into fair value or a discount. All right, you can see that? Can you see that, yeah? You with me so far, John? You with me so far, broski? Cool. So if you have a low which doesn't get back down to fair value or a discount, so this anything above 50% is red, right? So that's a premium. Anything below 50% is a discount. And this box in here is your OTE, 62, 79, and 70.5, right? So if price doesn't get back to fair value or a discount, this for me now becomes a weak low, right? It's a weak low. It's a protected low when it takes out this high, right? And puts in a new high, but it is a weak protected low because it never came back to fair value, right? So what you then want to be mindful of is, okay, so where do you sit on the higher time frame? Now, if you remember, this is the low on the 5 minute, this is the high on the 5 minute. So the protected low on the 5 minute is here, right? So if I just change this to yellow to delineate the 5, right? That's your 5 minute protected low. That's your 5 minute protected high. So that's your 5 minute dealing range. Okay. Whereas that is your high and that is your current protected low, right? But we know that it's a weak low because it never came back to fair value or a discount on the 1 minute dealing range. All right. So this is where you go to your 5 minute. So if you are anticipating bullish continuation, right, because it hasn't met a higher time frame institutional reference point, well, then you would anticipate a PDRA inside of a discount on the 5 minute. Okay, so this is where you can get your breaker blocks, you can get a invert fair value gap, you can get your fair value gap, you can get a order block, you can get an unmitigated range that price is coming back into before expanding higher, taking out the internal range liquidity on the 1 minute, right, before expanding to go and take out external range liquidity. Okay, so that in short, in essence, is how you use protected lows, protected highs, and the same principle applies, right, on the 5 minute as it does the 1 minute. So let's just carry this forward. So this low is your protected low, right? Right, and this is the pattern you're always looking for on the low, on the high, sorry, and this is the pattern you're always looking for on the low. Every single time on the low, you are looking for that signature and price. Every single time, right? And on the high, oh, done that wrong, 1 second. Right, every single time on the high. It's the same thing, right? This is a change in the state of delivery, right? Market structure shift, however you want to call it with ICT. Change in state of delivery, right? So what you have here is when this protected low gets violated and closes below, well, you now have a shift, you now have a change. Okay, so this 1 minute, that is now your protected high, right? And so you can just flip it if you're going bearish, right? Okay, and you'd be looking for price to come back up into fair value or a discount to then drive price lower. But you want to be mindful of where you sit on the higher time frame. Where are you on the 5 minute? Where's the parent dealing range? What is the parent dealing range? Okay, so if you're trading this short, you're taking it down to a 5 minute discount if you want to, right? So when we get down to a 5 minute discount here, and it's aligned with a higher time frame point of interest. So for example, this was an hourly SIBI fill, BISI fill, sorry. So say we just filled a BISI here on the hourly, all right, and we're now expanding out. And so you are expecting continuation. This is where you could look for a sweep of internal range liquidity, knowing that you've got weak close to get back into a 5 minute discount to then take price higher, right? So you got a fair value gap down here. But then you're looking for a breaker structure on the 1 minute. So this high, which put in this low, which closed below this old protected low, now becomes a protected high. Okay, so this high is your protected high. But when this high puts in a low lower than this low, this becomes your protected high. Okay, so if you're an OTE trader on the 1 minute, you know, some people want to wait for this to get broken, right? So once that breaks this high, you've now got a change again. So you've now got a change in the state of delivery where you've now flipped bullish again, right? So this becomes your protected low. when it closed above the old protected high, this becomes your protected low when it closes above this high, and so forth, right? But then you want to know, okay, so where, at this point you're like, okay, so where is price now driving to? Okay, so this is where you may have a higher time frame parent swing beyond the 15 or the hourly, right? But for argument's sake, we'll just utilize the 15. So for example, NQ right now, which is essentially how I'm trading NQ at the moment, right? So if price expands higher away from your high time frame institutional reference point, and I'm not going to start pulling in loads of other, you know, principles because it'll start getting complicated. But if you start looking at projected ranges and all that sort of stuff, I'm not going to get into that today. But if you are anticipating price to pivot or it comes into a high time frame point of interest on the high, this is where you want to be mindful of where you currently sit for a higher time frame change in state of delivery, right? So you always want to know where you are in the parent. So this, for argument's sake, okay, so this here right, could be an hourly premium, right? So a dealing range on an hourly, right? So an hourly premium. So you want to know that if you're getting up into this hourly premium, and the higher time frame is always king, where price is likely to pivot and turn. So this is where you'd be looking to take partials off or closing your position or looking to flip bearish if it's at a higher time frame institutional reference point where you're anticipating price to flip bearish, right? So that is essentially how I utilize protected highs and protected lows. So if we just go to a live example today, right? So I personally trade lower than the 1 minute, but you have. Let's have a look. All right, at no point has this high actually been closed below. You see this low here, right? At no point has a candle closed below it. You can see this wicks below it, but at no point has a candle closed below it, right? So what I'm looking at is the most relevant high which put in the low. Okay, so if we go to the 15, you see this high which put in the low. So it's a 15-minute dealing range, right? But what I'm looking for is price to operate inside of a premium, a discount after a breaker structure. Okay. So what I'll be looking at is this high, right, on the 1 minute. Albeit it's not, this is a little bit techie, but albeit it's not the 1 minute which put in the low, it is the most current 1 minute protected high, even though it's not the high which created this dealing range, because it's on the 15, right? Because this low didn't create this new low. So this high here, when it gets violated here, you've now got a breaking structure, right? Okay, but you got to then ask yourself, okay, so where's price going to? Where's the higher time frame dealing range? Okay, so this is the higher time frame dealing range, right? The 15. So price has now broken the 1 minute structure, but it's gone up into a 15-minute premium, where it then comes all the way back down into a 15-minute discount, right? So this high, when it's violated, gets violated here, right? So this was your protected low, right? When it violated this high, you can see price here comes back to fair value. You've then got this low, which puts in a new high. So this is your protected low, right? And at no point does a candle close above this high. So this remains your protected low, right? It still remains your protected low. Still remains your protected low. It only gets violated here, but what's it coming back down into? This is where you got to ask yourself, okay, so we've got a breaker structure here on the 1 minute, but where's it coming back to? Where it's a 15-minute discount inside of a 1 minute inverted fair value gap at a higher time frame point of interest. Higher time frame is king. We're inside of an hourly discount, right? So this is where you'd be looking for price to come back to repopulate, so then move price higher, right? So again, once this high put in this low, this was the protected high on the 1 minute. Once it closes above, you've now got a change in state of delivery. So this is your protected low, right? Price comes back to fair value before expanding, right? This high has now been closed above. Okay, so this is now your current dealing range. Price comes back to 62%, right? I'm currently looking at 77, by the way. 77 is my target. Okay, makes sense? And then what you can do is, like, if you're, and I often do this with the 15-minute, okay? So if you're anticipating price to consolidate inside of a higher time frame discount, so if you're looking for it to consolidate inside of a discount, what will often happen is inside of a higher time frame dealing range, and I always use the 15, you'll get price just bouncing between premium and a discount. And it will just keep doing this, right? It's probably even going to come back and sweep this, right? This is what you get inside a consolidation, right? So you just flip the dealing range over. So you're anticipating a higher time frame breaker structure. So what I always talk about is a lower time frame leading to a higher time frame break of market structure. So I did a good example on. Let me bring it up. What's this on? So this is NQ from Jan 14th. I did over the weekend, didn't I? Yeah, so it's this piece of price action here. All right, so this is my analysis for my trading on this particular day, right? So the M1 protected high gets closed above here. But then this is another technicality. If you don't have a swing low, you're looking for the low which displaces and breaks the structure, right? So this becomes your protected low. Price going back down to a discount, a discount, a discount. Closes above, new protected low. Okay, but then you then get, what's the easiest doing on here? Just me drawing it all out, right? So this is a 1 minute dealing range, right? This high which put in this low. Once it breaks here, got a break in structure. This is it, price going back down to a discount. You then got a new low which puts in a new high. It's a break of structure, right? So this is your new protected low, but it's a weak low because it's inside of a premium. Okay, so price comes back down to a discount of the 5 minute, right? So if you switch this over to a 5 minute chart, your 5 minute dealing range is here, right? Back down to a 5 minute discount. Back onto the 1 minute break structure. A new low which puts in a new high, but it's inside of a premium of this 1 minute dealing range, right? Weak lows in a premium, break a structure, return to premium, back down to a 5 minute dealing range, into a discount, right? Before expanding higher. So using protected highs, protected lows to navigate price, right? So market structure is what I focus on, specialize in. So currently looking for 77. Just looking to get up into a 15-minute premium to fill in this little 1 minute SIBI, which is also a mitigation of this range on the high. So that's currently what I'm after at the moment. I'm going a few ticks below, so I'm going at 77, which is 79% on the 15-minute dealing range. No, so a protected low is a low which puts in a new high, right? In a bullish profile. So that would be a protected. That's a protected low, protected low, protected low, protected low, right? When it flips bearish, you've then got protected highs, right? So protected high, right? So bullish is protected lows, bearish is protected highs. So all of this is now engineered liquidity, right? That's what I was talking about before, right? Just engineering liquidity on the highs. So I trade accumulation, manipulation, distribution. All right, so this is accumulation. This is manipulation. You've now got distribution, right? So this is how I trade. So I'm always looking to get in on manipulation to then capitalize on distribution, right? So 77 is the current draw, right? You know, so if you literally just look at this range, right? And if you can just get in sync with higher time frame order flow, on the lower time frame, all you have to do is wait for price to get back down into fair value of a discount of a 1 minute dealing range to find your entry. It really is that simple. Like, it really is that simple. So wait for accumulation, manipulation, distribution. Look for accumulation, look for manipulation. And then just if you miss your initial entry, just look to get back in on fair value of it or a discount of a dealing range. Of a 1 minute dealing range. But as I mentioned, this is the exact pattern that you're looking for on the low, right? Every single time. Every single time. And on the high, you're looking for exactly this pattern, right? Every single time. It will do the same thing. Every single time. It's just whether you can stay patient for it. So currently just looking for 79% on the 15-minute dealing range. So 77 is my current target. I use a whole host, broski, of ways of getting into trades. I'll show you. I'll break it down for you. So this is how I trade. Okay, so everybody talks about time before price, which is true, but for me, I have other things that go before it. Okay, so I have context and schematics that go before time, price, and then I have market structure, right? So this is my process to taking a trade. Okay, so all of this forms my context. So how I pick, you know, what price is going to do next. Okay, and then in here, these are my schematics. So this is essentially how price prints during every session, right? Or during the week. You're gonna get these deliveries in price during the week. Okay, whether it's an Asia London Judas, whether it's a New York AM session reversal, OBR, opening range breakout, classic buy sell days. This is all broken down inside Red Pill Uni. 1:30 Judas swings, 2 p.m. reversal. All of those are schematics. And so what I'm looking to do is get in sync with a schematic using high time frame context. Then I'm looking to enter around a certain macro. Then I can use a variety of entry techniques, and these are all the different entry techniques that I utilize, but it's all bracketed by market structure, which is essentially what I've been going through with you today, right? So all of this forms, you know, dialing in my entries, dialing out my exits. So this is essentially how I trade, and every single time I do trade, it follows this process: 1, 2, 3, 4, 5, every single time. So it's not like I'm just looking for a breaker. I'm not, you know, I'm looking for the context. I'm looking to see what schematic I'm in. I'm looking for the time. Then I'm looking to see what model I can enter on. Then I'm looking at the wider market structure and how I can frame my entries and exits. Okay, so that's how I trade. So I'm in the process of basically I've got a I use a trade copier. So one of my accounts, I've just got a tiny ratio on it, which I'm basically putting together for a YouTube video that I'm about to do soon to track my metrics and data, just to do a breakdown on how I do that. So I've basically got this one. Basically, I've got live accounts and multiple live accounts, but I've got this one on a ratio just for tracking purposes. So these are my current stats on that account, right? So this is from January, right? So this is running on a minus ratio to my live accounts with a copy trader, right? So this account is just running on a minus ratio. But these are my percentages. So currently at 62, that's lower than I normally am. Normally up at around 70%. Performance by week seems to be better on a Monday so far. There's the winning losing days. So 9 winning days, one losing day. 64%. I don't know why that one other one's saying 62. It was 65. So net win, net loss per trade. It's interesting how I'm best on a Monday. So those are my stats so far for the start of the year. So the sort of things I track are I don't care about this, right? This is like, it doesn't really bother me because if you're looking after everything else, you know, the money takes care of itself. So this is the percent I track. For me, I always want to be over 65%. I don't know why that one shows 62 and then this shows 65. I'll just speak to him about that. But 65 is where I'd want to be. And then I just want my average winning trade to be greater than my average losing trade, right? So as long as that's net positive, and we have an basically 65% win rate, you're highly consistent and highly profitable, right? And then you can look at your profit factor. Like that, that's a really high profit factor. That. So those are my metrics for the start of the year, just for full transparency. Anthony Smith, you trade in New York Open today? Yeah, I trade all day, bro. I trade all day. I trade from London through to New York close. I'm currently just looking for 77 on NQ, so I'm just looking to get up to 79% of this 15-minute dealing range. It's Apex is one broski. 2 seconds. Morning, Kiwi. Yeah, like they've recently brought out a new one, which is really good. So still looking for 77. If you're in this long, just make sure you're paying yourself. We're obviously inside of wider time frame, wider accumulation. We're also at 50% of this. We're actually at premium of this 15-minute dealing range, but we're hovering around 50%, right around this whole slope number, just chopping around. So if you are long with me, just make sure you're paying yourself. My terminus is 77. Just looking for mitigation of this range. How did everyone get on yesterday? Do good? Oh, sorry, just catching up with you guys on YouTube. I think I answered you, Anthony, but yeah, I trade all day, broski, if I didn't answer you already. Morning, Rude Boy, bro. What do you mean, my indicators? I don't use indicators, bro. Yeah, I manually put those, broski. I don't use that. If you talk to me about indicators, it's a quick fire way to get a ban. I loathe indicators, bro. I only use them for very, very simplistic things like open price, midnight price, kill zones. That's it. But I literally cannot stand indicators. Lazy mahas who use indicators. Just do it yourself. Take the stabilizers off. Grow a pair. So just looking for 77. If you're in this with me, terminus is 77. But you're inside the 15-minute dealing range, right? So this dealing range that we have here. So you're inside of a premium now, right? So if you're inside a premium, what should you be doing? Goddamn, paying yourself, right? To not pay yourself is lunacy. Pay yourself inside of a premium. So we've gone from up here on the high, right? We've gone from a premium on the hourly dealing range. Okay, so we're talking about protected highs, protected lows. This is the high which put in the low. Okay, so if you want to flip this dealing range over, if you're anticipating this high to be the high, right? You just flip this dealing range over on the hourly. Okay, so price has been inside of a deep premium, coming back down to a discount of that very same hourly dealing range. So this is a high time frame point of interest. an institutional reference point where price is likely to rally or at least pull back from, right? So this is where you're looking for your signatures in price inside of the higher time frame discount for an entry, right? So what we're doing right down here. If you guys, Andy, if you want to get a copy of my, essentially it's my Fibonacci, right? This is basically my Fibonacci tool, right? It's my premium discount Fibonacci tool, right? So if you guys want to get a copy of my Fibonacci settings, if you go over to my website, which you'll find in the show notes, or if you go to my profile on YouTube and just go into the my about bit and go to the website, and then you'll see a form where you can fill out very, very quick details, and then the computer will send them out to you in an email. So if you want to get a copy of them, that's the best way of doing it. And this is why you pay yourself inside of a premium. I'm still looking for 77 though. So going back to our earlier conversation about using TradingView integration, this is exactly why I do not like TradingView integration with TradingView, because you can't do OCO. So for example, terminus at 77, pay yourself at 62. Well, you've now just got additional contracts sitting at the low. Morning app script, mate. So I'm streaming between YouTube and Discord at the moment, guys. So currently up inside of a premium of this 15-minute dealing range. I still want 77. Let's have a look at ES, see what ES is up to. So we've got this, got buy side on ES, you've got NQ taking this high, so you'd anticipate ES going to take this high, pulling NQ up. So I'm just looking for NQ to run into 77. Just want ES to break.
Posh.
Gonna take one off there. Still looking for 77.
Posh.
Are we printing or are we printing? Are we printing or are we printing? Are we printing or are we printing, guys? You let me know. You let me know in YouTube and if you are printing. We do this all day, every day, by the way. All day, every goddamn day. Axe script for the win. Yeet! There we go, ladies and gents. Morning trade boxed. 1 minute inverted fair value gap. 77, still not done. Trust me, it's happening. What do you mean my TP, broski? My take profit? Yeah, I took one off at 70.5 of the 15-minute DR. There you go, there's your 77. 69 and then 71. And there's your 70, there's your 77. So now, what do you do? What should you do now? What should you do now? Bugger off. Exactly. Get off this stream. Go and do something else. You've bagged and tagged. Enjoy it. And there you go. Yeet. Terminus reached. There you go, Anthony. Welcome to Red Pill, brother. Is that not 77 to a tick, by the way? So just a little bit more, that would be mitigation of this range on the high. Check out the chicken enchiladas. Where are you going for that, Ings? Don't tell me spoons. Well done, Anthony. Well done, broski. I can't. I will never ever say where I'm getting in. I cannot do that. I don't have the liability for you guys. If you lose money, to come and sue me. But what I will give you is the draw and liquidity. It's up to you to find your entry. Cafe downstairs got a chicken masala for $4.09 last week. Yeah, you crap me up, AIDS, mate. Just hunt. You need to do a blog on budget restaurants, mate. I'd read that. Just for sheer shits and giggles. Yeah, Ainsley's budget restaurants. Let's go. And what I want is like pictures and like what to eat in these restaurants, right? So chicken enchiladas from Spoons, banging. that's what I want. Can you write that blog, please? Good stuff, John. Well done, Brewski. No problem. Take it easy. Have a good one. So now I'm just sat on my hands, just waiting for the open. So we got a high impact news event at 8:30. We have Empire State Manufacturing Index at 8:30, and we've also got earnings releases today as well. So be mindful of that. Morgan Stanley's dropping their figures, and Goldman Sachs. Time for Wordle. Guys, if you're on YouTube, you found value today, feel free, and you've made money, feel free to smash in the like. How about that? How's that sound? Lewd. What a word, X. Pick that out. Lewd. What? They would give me an absolute ruffian to start the day, wouldn't they? Yeah, I don't think you can do names, bro. I mean, it's a good shout. It's a good shout. If anyone on the tube has a shout for this, feel free to drop your suggestions in. As in Scottish Glen. As in Glen Whiskey, isn't that still a name? Or you're talking about the Glens, the region. It almost feels like it's a bit too much for this game. We'll go with it though, because I haven't got anything else. Olio! Come on. It's not even a word, bro. Is it me or these hard today? I just need to give my mate a brain arrest. These seem savage today. How you spell it? No. Ah, suit, you little chestnut. What? Come on! Let's go. Let's go. Do you remember when it was that? Stop laughing on me. Is it C? Yeah, boy. Come on, give us a break. Get out of here. Get out of here with gun. I think it could be time, but I know it can't be. You've done another one. I reckon 5. Pipe. Yikes. Yeah. I've got a feeling you were that kid in class, Andy. Were you that kid in class? So taking a morning trade today, boxed. So for those of you who caught it live on YouTube, good stuff. For those of you who got it inside RP, that's just usual business. Yeet. Has become a degenerate trader, right? I swear, I became Uncle Ainsley. I swear, as soon as you take your tie off in life, as soon as you remove a tie, you know, you lose that stiffness. If you wake up every day and you got to put a chain around your neck, hell no, hell no. Root of all evil, a tie. Ugh. It's only applicable at fancy dress parties, right? That's the only time it's applicable. You know, if you turn up as a Karate Kid or something. It's the only time it's allowed. If you want to be Karate Kid at a fancy dress. Weddings and funerals, no. Still no. Open tie. Open shirt. You know. That's what it's all about. Would I wear it? Maybe at the wedding. Maybe at a wedding. Come on, you know, if there's one day. All right. So perfect use of a protected low, protected high today, using higher time frame dealing ranges to frame our entry. So as you know, I'm looking for SPX to take the high, so that's why I'm still macro bullish. So currently looking at this as an early inducement to trap retail into believing the market's going to move lower, only to go and run these highs out. So for me today, I'd want to see NQ get back up into this this old Bissy. I'm currently looking at the lower quad So 32. Low hanging fruit. First, it's got to get through this whole site number. So I'm just going to wait to see what they do for high impact news event, and then what they're going to do with Morgan Stanley's drop. So I'm just sat patient at the moment. Right back in 2 secs. Sergio, are you trading gold again? I know Rome was trading yesterday. Have you gone back to it at all? Or not bothered? What about CL? Crude. CL Sundays, yeah. Roma took a nice trade yesterday. What's up, Larson? How's it going, bro? I can see you're on there, Twitter Spaces, bro. I'm over on YouTube, dude, so if you want to jump on, feel free to jump over on YouTube. How you been, man? Larson, grab a speaker tag, bro. Keen to hear from you, man. Keen to hear how you've been getting on. Yeah, no sweat, dude. Jamming. Cheers, bro. Appreciate it, man. Yeah, I did. Upgrade it over the new year. How did what grade did you get for that interview you did? Was it good? I loved the write-up, man. That was good. Did a good job. A+, bro. You know how it goes. Yeah, no worries, man. Anytime. So have you been trading or not? You trading at the moment, or what's the deal? You still just focus on your studies, or what?
As I'm in the midst of applying for residency right now,
So currently I'm just sat patient at the moment. Took a trade long on crude up to 77. So I'm just sat patient at the moment. Just waiting to see where we are going into the open. We've got news at 8:30, right? Manufacturing index at 8:30. I don't want to be entering in here long or short. I'm just sat on my laurels. So today was a classic use of accumulation, manipulation, distribution, right? Accumulation, manipulation for distribution, right? We were talking through this live at the time. So now I basically just want to sit still. I feel like there's an urge to jump back in. If you miss the trade, you miss the trade. And in this instance, we were using a 15-minute dealing range just flipped over, right? So it's a discount range of this 15-minute dealing range. So if you were looking for a premium to go short, which we were not, you'd be looking at the premium range. So price was chopping between premium and discount. Wait for it to get down to a discount to go long, or wait to go for a premium to go short inside of a discount, running into a premium of that 15-minute dealing range out of a hourly dealing range discount, right? So this dealing range on the hourly flipped over inside of a discount. So discount on the hourly, the parent price swing, 15-minute discount looking to drive out the highs. Simple. So right now I'm just sat still. So Larson recently has been interesting. I got two 50k funded accounts, then blew one. Which every time I have a bad loss, I don't trade for like a month and just study PA, which I've been doing, and now I feel really good about my ability. Good shit, bro. That's good stuff. Just remember your progress, right? That's what you got to do. You just got to remember your progress, because you know when you first start trading, you're going to blow a load of accounts. Then you'll start getting funded accounts. You'll start blowing funded accounts, and then you'll eventually stop blowing funded accounts. So that, you know, there's a process with everything. You know, there's a process. You know, even if you're trading live accounts, it's the same process you go through. You know, you put put 2-3 grand into a live account, you blow it. You do it again, you blow it. You do it again, you do it less. You might win some, and then you blow it, and then you put in another amount, and then you're consistent. So you know, whether you're doing it with a prop firm or live fund, it's just part of the journey, bro. So you know, don't feel too hard about yourself. You know, the fact that you still got one left is amazing. Yeah, well, I'm glad you learned, broski. And as you know, you're welcome back anytime. So. Yeah, that's where we got in this morning, Larson. That's what we traded this morning. So you're on a bit late, but this morning we traded out of this. So basically the 15-minute dealing range discount inside of a higher time frame discount, right? Dealing range on the hourly discount, 15-minute discount, and then you obviously had this 1 minute inverted fair value gap as your PDRA. But utilizing accumulation, manipulation, distribution. So my style, as you'll know, I'm always looking to get in on primary entries on manipulation. That's my style, right? So I'm an aggressive trader, and I get in on manipulation. I'm not interested in OTE. So I'm not interested in this. All right, this is where I'm looking to get in. So the manipulation of accumulation, manipulation, distribution. So accumulation runs internal range liquidity, so offset accumulation back down to this inverted fair value gap before distributing. So textbook trade this morning, pretty clean. Good stuff, Larson. Yeah. Like if you can literally just trade premium discount and stay patient for premium discount, that's all you need. that's like literally all you need is a premium discount. All right, and then you just want to get in sync with a higher time frame order flow, right? You know, so being downside of a higher time frame discount, look to get in on accumulation, manipulation, distribution on a lower time frame. Right, that's all you have to do. And then you just want to get in sync with that. So even if you miss your initial entry, just wait for price to get back to fair value or a discount of a 1 minute dealing range. Fair value. Right? That high doesn't take out this high, so that's not a dealing range. This high takes out that high, that becomes your dealing range. Right? Get in on a discount, stop below the low. Doesn't close below, so it's not valid. So that's still your dealing range at that point in time, right? That's still your dealing range. Closes below here, right? So then you have a break of structure here when this low gets broken, but that's where you want to flip to your 5 minute. 5 minute discount. Still no break, still no break. Breaks here. Weak lows. All right, weak lows. A protected low inside of a premium of a 1 minute dealing range is a weak low. So that's a weak low. Protected low on the 5 minute, put in a new high, dips down into fair value. So protected lows, protected highs. But so many opportunities to get in on a discount or fair value. So back up at the whole site number of 16.9. So it could likely to get sticky here. So I'm just sat out. That's amazing, Larson. What's your model, bro? What's the one that you focus on? Yeah. Yeah, market maker buy models, market maker sell models, something which I utilize as well. Power 3, yeah, absolutely. Yeah, it's good stuff, man. If you got grips of it, that's what you want. Good stuff, Lawson. Good for you, man. Good for you. You're always welcome back, bro. If you ever want to come back, you're always welcome back. Always welcome. So we're coming up to the whole site number 69. So this is where I'm looking to get sticky. So I'm currently looking at 16902, but I'm not going to be trading it. I'm just waiting for news at 8:30. I've already taken my trade this morning, so currently just sat patient. So back to 50% the hourly dealing range, right? At the whole site number of 16.9. That's mitigation of this little range here. This is where I'd want to be going short, run out this 5-minute low. See if you get a pullback. It's just so close to the whole site number of 16.9. I just see we're chopping this region for a bit. Good for you, Larson, bro. What's your daily goal? What's your daily goal at the minute? Enchiladas. Living the dream, Ains, mate. Living the dream. Yeah. Got the roadmap sorted. Good to go. So I'm currently looking at this little rejection block on the 1 minute. Yeah, just remember that the quickest way to the quickest way to get payouts for me is ES. That's the quickest way to get payouts, right? It's the least risky. It's slow. It's easy to manage. You know, it's just the easiest one to, and there's literally 5-handle ranges everywhere on ES. You know, literally everywhere you look, there's a 5-handle range. So you just need to pull out one a day. And so what I always suggest is like 2 contracts for 5 handles, right? 2 contracts for 5 handles. And then if you take a losing trade, you half your size on the next trade, and you mitigate that loss. So again, you go for 5 handles, 1 contract, and you'll actually mitigate and still be in profit. But the key is to have a low stop loss. So you want a 2-point stop. But that's the easiest way to get a payout. Jesus. Why didn't you just get your trading days under your belt? Let's go. Just go and trade the. Let's go and trade the the minis or micros. Micros, sorry. Let's go and trade the micros. Let's get your trading days done. Morning, Gaux. So if we went at this whole, if we went at a whole site number, I'd be looking to go short here. But because we're at this whole site number, I'm not. I'm just anticipating us to just chop about here. So it's not high probability for me. That's one way of looking at it, mate. So how long we got left on this? We've got 10 minutes left on this hourly candle. So all of this liquidity on ES for yesterday during the bank holiday is an obvious draw. I just want to see a pullback first. Are you right? Say again. Can I see it? No, not yet, no. All right. All right, sounds good. All right, bye-bye. So I'm currently wanting to see 17. I just want the Asia high. I want to see if we double top the Asia high on NQ on the hourly. So 5 minutes left on this hourly. Currently looking to see if we double top on NQ on this high on the hourly. The Asia high. 50% of Friday's wick. Just to get it back to the midnight open. So that go. So 2 minutes on this hourly. All right, see if it holds. See if it holds. Looking at 17 to hold. Just want to pull back to midnight open. Posh! Take one off there at 10. Posh! Take another one off. It's just a 10-point scout, 2 contracts. Just got one runner. Just looking for this little volume imbalance down at 95. Anybody get in? Sorry, I went quiet because I was in a trade. Anyone get in on that? Are we yeeting? Or are we yeeting? So I've got my stop on my runner just above this high, basically where I got in. Just looking for that 1 minute volume balance as my terminus. 2 secs. So just got one runner left, looking for this little volume imbalance right here. There you go, all day, every day. So if you shorted off the top of me, you got a nice little 20 points there. So a couple of trades this morning during London. It's going to be it for me. I'm just going to sit and now wait for the news at 8:30. Should have held a runner, shouldn't I? Shoulda, coulda, woulda. Shoulda, coulda, woulda, baby. Right, how's everyone getting on? How's everyone getting on this morning? Anyone taking a trade this morning? Douche. Let's have a look, see who we got. So we got Ainsley in the house, he's green. Bosch, my guy. We got Andy White, yeet. Jay, good stuff, broski. Kiwi, silent assassin, good shit. Like to see it, guys. Well done. Who else we got? Axcript, yeet. Sergio, Stahan, dude. Galton, no traders of yet. Fair play. Sorry. So currently, in hindsight, I should have held runners. 64. Basically, this old high inside of this inefficiency is what interests me at the moment. So 64. So C of this H1 Bissy. Is my current point of interest. I had to bring daughter to doctor's appointment. Oh, unlucky, bro. Who's ill? Which one's ill? Dude, no joke, man. Like, seriously, I had to drive. And the reason why I was on slightly later today is so I had to drive my missus to work today because she will not drive in the snow. And so I had to drive her to work today. As soon as the snow comes out, that's it. It's done. So, yeah, my missus will probably get on with yours, mate. Pretty much everyone I know has gone down with bronchitis at the start of this year. It seems to be the in thing at the moment. You can't shake it. So I don't know who is ill, Galxin, but if it's that, I feel for you because it doesn't go. You end up getting a chest infection. You need antibiotics for it. So 2 trades this morning. We went long. out of this inverted fair value gap, took it up to 15-minute premium to 77, and then we went short off 17 on the high, back down to the midnight open price. So those are my 2 trades this morning, so I'm just locked in. Your daughter had it in November, she still got it, Ains. Ah, female stuff got you. So she was one who started it, was she? Ainsley's daughter. Right, okay. I see. Because November sounds pretty early. It's like the Chinese starting coronavirus. Ainsley's daughter started bronchitis this year. Red pepper soup, eh? So exactly as we were saying, double top the high on the Asia. Beautiful, beautiful delivery, mate. Beautiful. So you got news in 5 minutes. So I'm staying patient. Yeah, so I'm thinking about doing it Tuesday, Thursdays, and then just solely inside Red Pill Monday, Wednesday, Fridays. So yes, looking to do it more regular on a Tuesdays and Thursdays. It might be something which I'll do on a regular slot. Tuesdays and Thursdays on YouTube, Monday, Wednesday, Friday, inside the server. Well, I think probably what I'm going to do on YouTube is that I'm not going to talk in depth about stuff that's inside Red Pill Unique, right? It's pretty much just going to be me doing signals, literally just calling price as it prints. That's more likely what I'm going to do, right? So pretty much like what we've done today, right? Just saying where price is going, where it's going to pivot, where I'm getting in, where I'm getting out, that sort of stuff. Just a lot more. And then keeping all the education inside of RP. Oh, you're welcome, Yaz, mate. No source talk, no. Wouldn't be fair on you guys. But yes, standard market structure stuff. I'll catch you up. Yeah, you're 100% right, Yaz. You're 100% right, mate. But, you know, obviously if people want to learn, then I'm here for them, right? If they actually want to take their trading to the next level and they don't just want to be a, you know, just taking signal services. If they actually want to learn how to trade, then I'm here for that. I can help someone become fucking rich. But I'm not going to just spoon feed it to people. I've got this thing in my real estate business, right? It's like I won't do business with anyone unless there's like a monetary engagement. I just won't do it because they're not invested. Like, you have to be invested. If you're not invested in anything, what's the point? You're just showing up, right? You know, so I get lots of people who come to me with deals where it's like an option deal, where they're like, oh, you know, I've got this deal, you know, will you fund it? And then, you know, we'll profit split it. I'm like, I'm not going anywhere. I'm like, are you putting money in it? You putting money in it? And they're like, no, you're putting in the money. I'm just fine, you know, I'm just finding the deal. You know, I just don't want to do that anymore, right? I don't want to get into those sorts of relationships where, you know, it's not an equal pie, it's not an equal sum game, right? So it's the same with trading, right? Like, you know, people who join RP, I'm invested in them, right? And I'll give you my undivided attention, and I'll help you change your fucking life, guaranteed. But I'm not gonna just sit here and give away my time for nothing if there's, you know, someone doesn't want it enough. Basically, you got to want it enough. They're the kind of people I deal with. When you come to Florida, we'll build another real estate. 100%, bro. 100%. It's definitely on my cards. That I definitely do want a pad in the States. 100%. So you'll be my agent. Yes, it's already sorted, mate. Because more than likely I'd move to Florida anyway. So I've still got friends out there from when I used to work out there. So I'll probably move to Florida anywhere, if anywhere. Is Peterborough on the list? I don't know what to say to that, Ainsley, mate. What's the name of that guy? There's a... Oh, fucking hell, what's his name? Have you heard of progressive property, Ainsley? Right. I'm probably talking out of random circles here. It's probably a property circle thing. But there's a guy, but he's based out of Peterborough. What's his fucking name? He's big on socials and stuff. What does he do? No, he teaches people like buy-to-let strategies and that sort of stuff. He might do a bit of co-living. I've forgotten his name now. He's alright weirdo. What's his name? Yeah, Rob Moore. This guy. Pretty sure he's not slapped all over Peterborough. I'm sure they're based in Peterborough. Are they based in Peterborough? Yeah, Peterborough. Progressive property. They're quite big in the real estate world. Based out of Peterborough. Is that near your new office? By out of interest, James? No, Exactly that. He's bucking the trend, mate. That's what he's doing. Do you know Rob Moore, Rude Boy? Have you come across him before? All right. I've met him a couple of times in person. He's an odd character, though. So for me, I currently sat out. I'm not trading this data. You've also got Morgan Stanley dropping their earnings reports, and you've also got Goldman Sachs dropping theirs as well. Anytime pre-open. So anywhere between now and pre-open, you've got two of the biggest institutional funds that are releasing their earnings. So I'm not engaging in price at the moment. Already taken my 2 trades this morning. A long and a short. Well, that's essentially what I wanted to do. So I wanted to be off 64 at the open to go run the highs, run the Asia high. But it's gone and done it on data. So. So just in terms of overall macro, my bias is always bullish until we take this high on SPX, right? So when I'm framing context, I'm looking at price in the context of being in a bullish macro. So this accumulation, this inducement, this manipulation, distribution to go and run out the highs. So Today we came back down into an hourly discount. This is where we went long earlier, out of this 1 minute inverted fair value gap. Expecting a pullback. Now you've got the typical cup and bollocks for retail traders, right? So now I'm just sat patient, right? I'm just sat patient. We're currently at 50% of the hourly dealing range. It's not particularly where I want to be trading. I've already shorted it once, so I don't want to do it again. So I'm just sat patient. We've got news coming out between now and open with the earnings releases. So if you've not traded already and you've got itchy feet, just stay patient. Or go blow your accounts, either or, I don't mind. G'day, mate. So I was going through this earlier. It's quite interesting. So I basically got, I'm about to do a YouTube video and shoot a YouTube video. So I've been, basically I'm going to go over sort of metrics and that sort of stuff. So I've had a live account with Apex on a minus ratio on my copy trader, right? Since the start of the year. Just so I can just track, basically just track metrics. That's all I'm interested in using it for. So I can bring in this. So these are my metrics on my account, which I'm running on a minus ratio. And so it's, I just wanted to highlight the certain things which I'm sort of tracking, keeping an eye on. So for me, like this is like the key statistic, right? Your winning percentage. So I'm always looking to be over 65%, right? So this isn't actually quite accurate. I don't know why it does this, but if I go here, it's 65%. So I always want to be 65% or above. Usually I'm around 70, 75 by the end of the year. That's usually where I sit, around 70, 75% accuracy. And then the only other thing I'm looking at, which is of huge interest for me, is the profit factor and my average winning trade versus my average losing trade. So if this is basically 2 to 1. So if you know what I mean. So 1.5 more. Well, it's half more than this, right? So as long as this is positive and this is above 60%, but technically above 50%, you're consistently profitable. So I always try and keep this above 65% and always keep that net positive. And if I do that consistently, then I will stay consistently profitable, right? So these are my metrics for the year on this one account. So weirdly, I'm most profitable on a Monday. I remember when I first started trading, I used to track this so much, and I'd be like, well, I literally took one loss. Like, well, I'm definitely not going to trade that time again. But I don't really pay attention to that anymore. So yeah, just make sure you track your trades now and again. All right. I personally use TraderView, and so at the end of the day, I'll import trades from this account into that, and then also TradeZeller, right? So I'm just using TradingView at the moment on this account just to track this one. But it's good to keep you in tow. Funny that. So ES still hasn't taken the Asia high. NQ has. That's fucking wild. So for those of you who are on from this morning, 32 was my target. It was just short. Two secs. What's up, guys? So literally couldn't have called the target for today more accurately. Well, I could have 2 points off. So we're currently just hovering around 50% of this hourly dealing range. So right now I am completely neutral. Sorry, Galaxy. I'm on YouTube, bro. So I think sometimes the camera freezes on in Discord. No worries. So look at gold. See what gold's up to. So for those inside RP, you'll kind of know what I'm looking for if you read the gold Dixie correlation that I'm talking about. But ideally, I want to see a pullback for a shift around March. So I'm looking for gold to drop, and if gold drops, you're anticipating Dixie to rally, right? Galaxy, how long do you think I'd? How long do you think I was going to be onto the computer for? So when gold goes down, looking for Dixie to rally. So for me, this is when you want to go back through your IPTA days, right? 20, 40, 60, and look for highs to get swept. And if we haven't reached that time by that shift when you're anticipating it to shift, right? Which for me is March. I'm still looking for Dixie to be bullish until then. But ultimately, I'm still looking for SPX to go run this high. So what you can see is like inverse correlation between Dixie and the indices. So essentially what you can see is you can see Dixie rally, but you can see the indices rally with it, and then the indices dump going into the seasonal shift. And then Dixie just goes into a period of consolidation when the indices catch up. So at the moment, I'm not really paying too much attention into Dixie at the moment. I'm anticipating it to do what it's doing, right? But I'm net bullish on the indices with this all-time high still left in place. So what I'm looking to do is waiting for the seasonal shift around end of Feb, early March. and then I'll have a better indication of what the long-term view is. So I was saying it all last year. I was anticipating them last year to build in a premium, right? And this was in if we go back to on the daily, right? This was October. So this is when we had the seasonal shift in gold. All right, anticipating them to build in a premium ahead of this year. Okay, so I'm anticipating them to run these highs to then pull back later in the year, right? That's currently what I'm looking at. So in relation to Dixie, I'm looking for Dixie almost to do the same, essentially building a premium. If anyone's got any questions, feel free to reach out. Or if anyone wants to jump on mic, feel free. If you want to ask any questions. Oh, you're on ESX group. That's not the. So don't forget, you got Goldman Sachs dropping their earnings very, very soon. So I'm not trading until mid-morning macros for me, if I trade again. You're welcome, AxScript. No worries, mate. Yeah. Oh, that's why, isn't it? Hate. What the fuck is hate? It cannot be. It cannot be. Morning, Emilio. How have you got poke out of that? Sometimes you guys, I swear you do it just wind me up. Hype. Yeah, that's me spelling it with an I. Woo! I'm on these, and I'm on antibiotics for this bronchitis thing. I'm coming to the end of my course, and it's just absolutely, it's battered me. It's my mind is foggy. I think Wordle is an amazing thing for a trader to do before they start trading, because if they can't even do like a 4-letter word, you should probably take a day off. What? Kelly, man. Oh. Kale. Course it is, mate. Course it is. There's a good old English word. Oh, it's in there as well. Oh, get in. So I'm not going near. I'm not going near this open with Morgan Stanley and Goldman Sachs dropping their earnings. No chance. Oh wow. Cheers, Galaxy, mate. Galaxy, help me out. Help me out, Gaux. Hype. Oh yeah, good stuff. Good stuff, Maris. Well done, broski. You got it. The previous one. She never ceases to amaze me. Never ceases to amaze me, that girl. Oh, it can't be that. Can it, mate? Oh, this girl. Marry me, marry me. Oh, let's go. Oh dear, oh dear. Nerd alert. Oh dear, oh dear. So if you're tuning in for trades, good luck with that. I'm deep in Wordle. You're more than welcome. We'll take over the world, me and Galax. We got it. We got it sorted. Yeah. You bastardo! You're so mean! How the fuck? Is there no vowels in this word or what? There's no vowels in this word? What are we doing? Yeah, it's got to be, mate. Oh wow, wow. I have a missus who I've been with for 15 years, Kiwi. But if I didn't, same. FOMO. Ah, oh, boo. I'm gonna go with Gimp. Lim. You guys are smashing it today. Yeah, comb. Oh shit. Gouching from the clutches of their feet again. Right, one more. God, give me a break. God damn it. Gouching. I give up with you, mate. I give up with you, mate. I'm too good. So for me personally, I'm just staying patient. I've got no interest trading around 50% of a high time frame dealing range, none whatsoever. Absolutely zilch. So I'll be looking towards the mid morning macros to see where we're at, see if there's any A plus setups to take. But where we are right now, price can come run these lows. It can run off the open, go take this buy side. So for me right now, I'm just sat patient. They release their earnings? So Morgan Stanley are down, Goldman Sachs are up. Goldman Sachs are up 51% on projected. Not bad at all. On NQ, no, we've already taken the protected high, Galton. Oh, sorry. My map. No, the protected high is still up at 1743. This high. Let me flip this dealing range over. Discount back to a premium. Just don't forget this divergence that we have from yesterday with ES and NQ, right? If you remember this divergence that we have all the way up here. Alright, so I'm basically hesitant to short. I don't want to be going long here, so I'm just sat out at the moment. But you had this divergence at this high with the ES taking it, NQ didn't. So I'm just mindful of that from yesterday. And also on ES, you've got all that liquidity that pulled up here. But it's 50% of the dealing range, right? This isn't like, it's not high probability places to be trading. And when it's like that, I just don't want to get involved, right? You know, we've already shorted it once. We've already went long once. So, you know, don't push your luck. It's just my mantra. It's in my rules where I just don't trade around fair value of a dealing range. And the only time I'll trade around fair value is if it's inside of a point of origin. I'll look for fair value, or if it's or if I'm in sync with lower time frame order flow, right, where I'm using like a 1 minute dealing range fair value, then I'll use it. But higher time frame dealing range, bang slap at the hourly, not for me. So ES doing the turtle suiting. I don't particularly like that. So you could have taken your you could have taken your you know, little 20-point scalp there, basically using this MIP block inside of the RTH gap, right? We've spoken about that previously. So All right, so I personally didn't take that short using the MIT and the RTH gap. If you did, it's something we've spoken about at length. Good for you. I personally didn't take it. So that's going to be it for me today, guys, on YouTube. I'm going to wrap it up here. A couple of nice trades this morning during London. This inverted fair value gap on the 1 minute, and then we shorted off the high off the RTH high. So they're my two trades from this morning. Stay patient during the open today. So that's going to wrap it up for me on YouTube. And I'll see you next time. Probably Thursday is probably the next time I'm going to do it. So if you're about on Thursday, I'll see you then. All right. Ambush!